Good afternoon, everyone, and welcome to the first Money Talk Tuesday of 2022. My name is Sarah Safi, and I'm a program assistant with the Office of Economic Empowerment. And today's webinar will be about the changes to public service loan forgiveness. Before we get into the main presentation, I will tell you a little bit more about the Office of Economic Empowerment. Then we will go over some Zoom housekeeping notes. Then we will have our main presentation with Dr. Scott Filter from the Consumer Financial Protection Bureau. And finally, we will conclude with an audience Q&A. So the Office of Economic Empowerment is a department within the Office of the Treasurer and Receiver General of Massachusetts, tasked with supporting, advocating, and facilitating policies that empower all Massachusetts residents. Our programs serve women, families, high school students, veterans, and seniors. Our priorities include financial education, closing the race and gender wage gap, racial equity, college affordability, and promoting STEM education. As you may have noticed, this is a webinar and not a meeting, so you won't be able to view the other participants. If you would like to communicate with the hosts or anybody else on the panel today, you can use the chat feature. We will also be using the chat box to drop some relevant links throughout the webinar. At the end of this webinar, we will have an audience Q&A, so you can use the Q&A function to submit any questions you have. And once the webinar concludes, a brief survey will pop up on your screen, and we kindly ask that you fill it out as it helps us improve this program. And just a disclaimer about today's event, it will cover the changes to the Federal Public Service Loan Forgiveness Program, so it doesn't account for any differences or policies at the state level. Next, I would love to introduce a new program that we are offering at the Office of Economic Empowerment called the Worth and Wealth Seminars. Registration for Cohort 1 has opened today, so you could use the QR code or the link, which will be dropped in the chat box to register for Cohort 1. And basically, the Worth and Wealth Seminars will provide Massachusetts women of all cultural and socioeconomic backgrounds with financial skills and knowledge to become more confident in their economic futures. This program will have 5 sessions over 5 weeks covering topics such as salary negotiation, understanding employment rights, mapping and achieving financial goals, investing your money strategically, and more. So if this sounds interesting to you, please register, or at the very least, you can visit worthandwealth.org to learn more about the program. If you'd like to attend a future Money Talk Tuesday, you can visit this link, which will be included in the chat. To explore other financial topics that might be relevant to your life, you can visit myfinanciallifema.org, which is another resource that we offer here at OEE. And finally, if you have any questions or feedback about this event or any other Money Talks, you can always email us at moneytalk@tre.state.ma.us. That concludes my portion of the presentation. I will now turn it over to Scott from the CFPB.
Thank you, and I will start by sharing my screen. There we go. Thank you. My name is Scott Filter, and I'm a senior advisor with the Office of Students and Young Consumers at the Consumer Financial Protection Bureau. I'd like to start off by thanking Sarah and the Office of Economic Empowerment for the Commonwealth of Massachusetts Office of the State Treasurer for inviting me today. And I'd like to thank you all for tuning in to our presentation on public service loan forgiveness. This webinar is intended to help you navigate the recent updates to the PSLF program and how you might be able to take advantage of loan forgiveness for public service employees. Let's start with the CFPB's standard disclaimer. This presentation is being made by a Consumer Financial Protection Bureau representative on behalf of the Bureau. It does not constitute legal interpretation, guidance, or advice of the Consumer Financial Protection Bureau. Any opinions or views stated by me, the presenter, are my own and may not represent the Bureau's views. So today's discussion is going to focus on PSLF, including how student loan borrowers can become eligible, how to apply, and we're going to discuss some recent changes to the PSLF program through a limited waiver opportunity. And we'll also go over some additional resources and other materials to help you stay on track with your student loans. First, a little bit about the Consumer Financial Protection Bureau. The CFPB is a federal government agency that works to improve consumer finance markets by making rules more effective, by enforcing those rules, and by empowering consumers to take more control over their financial lives. I'm from a division in the CFPB that focuses on helping consumers navigate financial products and services. We serve the general public, but we also focus on a series of special populations, including service members, older Americans, traditionally underserved communities, and students and young consumers. We help students and young consumers prepare for financial decisions, such as paying or saving for college, managing money, building credit, and of course, repaying student debt, all with an eye toward preventing student loan default or other negative financial events. With that in mind, we're going to talk about Public Service Loan Forgiveness, or PSLF. PSLF was established to encourage individuals to pursue careers in public service. Those who choose to work in public service often face substantial financial hardship and may not be able to repay their loans over the standard 10-year repayment period. This program was designed to help those employees provide a service to the public and satisfy their student debt repayment obligations. So what is PSLF? PSLF is a program where a student loan borrower can qualify for loan forgiveness by paying their loans for 120 months while working in public service for a qualifying employer. And we'll break all this definition down as we go over the qualifying criteria to reach PSLF in the next couple of slides. Important to know that on October 6th, the Department of Education announced for a limited time, borrowers can receive credit for past payments that would not otherwise qualify for PSLF. With this limited waiver, if you have been working in public service but have never explored PSLF, or were previously discouraged from taking advantage of PSLF because you had the wrong type of loans, this is their time to take advantage of the limited waiver and consider whether or not you want to explore PSLF. Under this limited waiver, any prior payment will count as a qualifying payment. It does not matter the type of loan, the repayment plan you were in, or whether that payment was made in full or on time. You can receive forgiveness even if you are no longer working for a qualified employer at the time of application or forgiveness. This is a truly limited time opportunity, and it expires October 31st, 2022. To receive credit for past payments, you must take action prior to this deadline. Your next steps depend on what type of loans you have, and we'll go over that in the next slide or two. If you're unaware of what type of loans you have, you can log into studentaid.gov, which is at the bottom of this slide, to find out more information. All of your federal student loans will be listed after logging in with your username and password. You will need to know what type of loans you have before you can move on to the next step. So to qualify for PSLF, you must make 120 payments while working for a qualifying employer. Any federal, state, or local government or military service will be considered qualifying employment, along with any nonprofit that is a 501c3 or an organization that is providing certain types of qualifying public services. It only matters if you work for a qualifying employer. It does not matter what you do for them. For example, if you work for a public school, all the employees who work for that school qualify for PSLF, regardless of whether you're an administrator, you're an assistant, you work in the cafeteria, or you're a classroom teacher. If you have any questions about whether your employer qualifies for PSLF, we recommend you use the Department of Education's PSLF help tool. And now the other thing to keep in mind is that you need to work full-time. And that means you must meet either your employer's definition of full-time employment, or you must work at least 30 hours a week. If you happen to be employed in more than one qualifying part-time job at the same time, you can combine those hours to meet the full-time employment requirement, as long as you work a combined average of at least 30 hours per week with all of your employers. Now you need to make sure that your payments count. Only payments that are made after October 1st, 2007 will count towards PSLF. And that's because that was when the program was created. So you can't receive credit before the program actually exists. You do need 120 payments, but they do not have to be consecutive. If you started working in public service, then move to a private sector position, you can always return to public service and continue to qualify for PSLF. It's always good advice to keep a record of your payment history, so download a copy and save it for your files. We also recommend that you fill out a PSLF form with updated qualifying employment every year so that you can make sure that you're still on track to qualify for PSLF. So let's talk about how you qualify for PSLF if you already have direct loans. If you log into studentaid.gov and find out you have direct loans, all you need to do is make sure that you've submitted a PSLF form with all of your qualifying employment. If you have not submitted a PSLF form, you should fill out a form with all of your qualifying employment by October 31st, 2022. If you have worked for several public service employers, make sure that you have a PSLF form for each qualifying employer, and all of those forms do need to be submitted by October 31st, 2022. A special note here for borrowers with Parent Plus loans. Generally, Parent Plus loans do not qualify for the PSLF limited waiver. If you have Parent Plus loans and want to learn more about PSLF, contact your loan servicer to learn more about your options. They can walk you through the next steps based on your situation. Now, what if you have other types of federal student loans that are not direct? These loans could be from the FFELP program, also known as the Federal Family Education Loan Program. They may be Perkins loans, or they may be some other type of federal loan. If you want to be considered for the PSLF limited waiver, you need to complete a direct consolidation loan application by October 31st, 2022 to make them direct loans. And then you can fill out an application to consolidate directly on the Department of Education's website. And you must complete this application by the deadline, or else you will lose out on the opportunity to get past payments to qualify toward PSLF. Be sure to act within that time frame to get credit for those past payments. And similarly to as if you had direct loans, you'll still need to fill out a PSLF form with all of your qualifying employment information. These forms must also be submitted by October 31st of 2022 to be considered for the limited waiver. If you'd like to learn more or share this information with others, we have created a series of guides to help public service employees qualify for PSLF and the limited waiver. We have guides tailored for several different public service employers, including Peace Corps volunteers, first responders, teachers, and others. Guides are available to download on the link available on this slide. And then before we start with questions and answers, I wanted to highlight some additional resources for you. The Department of Education has a series of frequently asked questions available on their website related to the PSLF limited waiver, as well as a web tool to help you navigate PSLF. I recommend bookmarking these pages so you can stay up to date on any new frequently asked questions or additional guidance provided by the Department of Education. If you want to take next steps and consolidate your loans to qualify for PSLF, the link to the consolidation application is also available on this slide. If you have any additional questions that may specifically be about your individual case, we recommend that you reach out to your student loan servicer first. And then if you run into a problem, you can contact the FSA Ombudsman Group or submit a complaint with the CFPB. And both those links are here at the bottom of this slide. I also want to share one additional resource. The CFPB offers a podcast for student loan borrowers, young consumers, and those who serve them. The Financial Intuition podcast focuses on a variety of topics pertaining to saving and paying for higher education, managing money, and repaying student debt. Our team will share interviews with financial practitioners, students, and recent graduates, family members, and young adults that have successfully managed their money and repaid their student loan debt. You can access our podcast by following the link provided on this slide, and we hope you subscribe to future episodes. And thank you for listening to this webinar. If you'd like to sign up for the CFPB's email list to get future notices of our webinars or other materials, please visit our sign up link on this slide. Thank you very much. I hope you have found this information useful, and I will now turn it back over to do question and answers.
Thank you so much, Scott. It was a very informative presentation. I will now turn it over to my colleague, Christine Callahan, to do the Q&A portion.
Awesome. Thank you, Sarah. And thank you, Scott. That was such an informative conversation. And we've gotten a lot of great questions and answers. So I'm going to go right into it, and feel free to drop your questions and answers into the chat box or into our Q&A, and we will try to get to all of them. So Scott, the first question I got is, I am in the process of consolidating FFEL loans into federal for my grad school loans to qualify. My undergrad loans are federal and already qualify. Will payments for each qualify? For example, do both payments, one for grad and one for undergrad, made in the same month count?
If I understand the question correctly, I think there's a question here about whether or not the loans that have already been qualifying will equal the same payments as those that are just going to be newly qualifying. As long as you fill in all the applications, which would include that direct consolidation application, which you've said that you've submitted, as well as a PSLF form indicating all of your previous qualifying employment, under the PSLF waiver, those should match out and come to the exact same amounts, as long as there's not a situation of you started making payments on the first set of loans and then you went back to school to get the additional sets where you would not have already been making any payments on those grad loans. As long as you've been making payments on both sets of loans, you should receive an equal qualifying payment for that, as long as you meet all the deadlines for the PSLF waiver.
Great, thank you for that. Our next question we have is, what are they doing for payment pause during COVID?
Yes, that's a very good and very popular question. As everybody should know, since the middle of March of 2020, the payments and interest on your student loan, on your federal student loans, have been paused. You've been able to make payments on your loans to still bring down that principal, but you've not been required to. So if you have been doing it unnoticingly, and you did want that money back, you could get that money back. Regarding how that impacts with PSLF, as long as you still have the qualifying employment for those months, you will receive credit even though there's no payment due. So even if you go back, request a refund for, say, maybe the April in 2020 payment, request that back, so it's zero payment. As long as you're still full-time with an eligible employer, you'll receive credit.
Great, thank you. The next question we have is, do payments made while loan was in default count?
Unfortunately, for the PSLF waiver, those loans do not count if they're in some sort of default, or if they are in deferment or forbearance. You actually have to have the payment there to be able to be made. That's not to say that the department's not working on other issues on how to handle those types of payments. So I pay attention to what comes out from the Department of Education. Obviously, I don't have any type of internal of what they're working on, but I know that this is of great concern to the Department of Education.
Great, thank you. The questions are coming in, which is awesome. So the next question we have is there an income cap for income-based plans when filling individually or jointly?
There are some. Based on what the various repayment plans, a couple of them do have, you have to show a specific need for the repayment plan. The most, and what I would personally recommend is the most advantageous plans, which is currently the repay plan. That does not, that has actually opened up a pretty generous plan for everybody. So if you're looking at those, there are some income driven repayment plans that do require some sort of low income threshold or rather high debt threshold compared to your income. But there are others that do not. So there's definitely still opportunities to get into the right repayment plan to qualify for this, even if you do earn a lot.
All right, good to know. Thank you. All right, the next question we have is, if you're already signed up for PSLF with all employers, with the waiver that makes previous partial or late payments count towards the 120 count automatically, or do I need to do something to initiate that?
If you're fully updated with the information to your loan servicer on your employment through the PSLF forms, there's nothing additional you should need to do. Your loan servicer should go back and review any payments that they did not originally count for that waiver to give you past credit. I do recommend that if you've not heard anything yet from them, that you reach out to your loan servicer just to ask. I know this from personal experience, since I've also been affected by the PSLF waiver, that at first, when they first announced it, shortly thereafter, I received notification that they were reviewing my case and that they expected a certain number of payments that would then be counted. So if you haven't received anything like that, I would reach out to your servicer just to make sure that you haven't missed some sort of communication from them.
Definitely, it's always good to just check in and make sure your records are matching up with what they have.
Exactly.
All right, so the next question we have is, what about people who had to pause their employment during COVID and therefore did not have a qualifying employer during the pause?
Again, I can't give you 100% on this one. If you have not followed through, I'm under the impression from the PSLF waiver guidance that you may still be able to receive credit for that. You do need to just follow up with your loan servicer. I would double check there. I don't want to give a 100% that that's still going to happen. My understanding is the conceptualization of the PSLF waiver is that as long as the payment's there, your employment does not matter. So you should receive credit. But I would again follow up just to, again, if you have not gotten any information on that from your loan servicer, that you do follow up just to make sure that they have all the accurate information for you and that you receive due credit for that waiver.
Sounds good, thank you. Next question. Hi, I've been paying back my loan since 2004. I consolidated my federal loans with Fed loan in 2014. Prior to that, the loans were serviced through Sallie Mae and Navant. Will the loan payments made to Sallie count?
They may or may not. What I'm hearing here is, first of all, any loan payments that you made between that 2004 date and the beginning of the PSLF program in 2007 will definitely not count.
Okay.
Now, I'm also hearing that you had a later consolidation date. Which may think that your loans originally were in the FEL program, which means that originally they won't count, but under the PSLF waiver, you can receive credit for them.
Okay.
That's something that they should go ahead and double back to look at, and even go back further. But prior to that consolidation, since even if you had FEL loans, the waiver is to go back and look at those to make sure you receive proper credit. So you should probably receive some sort of credit from 2007 on, as long as you had the qualifying employers. If you haven't heard anything from them, because now I'm guessing if you're a full-time employer straight from 2007 to now, you've hit that 10-year mark. So if you have not heard anything from your student loan servicer, that may mean that they're not aware that you're interested in the program. So you may need to submit a PSLF form to them for them to review your application.
Great, thank you. All right, if I have payments and deferment because I just got out of college within the 6-month grace period, are those currently accruing interest despite the COVID halt on interest on other loans?
Specifically during the CARES Act payment suspension from 2020, no interest will be accruing on your student loans for that, as long as they're the direct loans and government owned. Some of the older FEL loans, which if you just graduated, you probably don't have, may still accrue interest during this time, because it is up to the loan servicer whether or not to for that type of benefit to you. It was not grandfathered in under the law. So I would just double check to see what type of loan you have. But whether you were under your grace period and you had subsidized loans or under the CARES Act benefit since March of 2020, you should not have had any loan interest accruing on your loan since that period.
Okay, good to know. Thank you for highlighting that. Next question we have is, if more than 120 qualifying payments were made on FFEL loans before consolidating to direct loans, will refunds be given?
The answer, I believe, to that is it depends.
Okay.
So, and I wish I could talk. I'm going to actually ask this person. If this person would actually message me directly on my last slide, I had some contact info. I'd like to get some additional information before giving an answer, but I'll give some kind of generalities. So I want to know, I'm guessing that they're on some sort of income-based repayment that's taken them beyond the 100 or the general 10-year repayment. So that they've had some amount that they've then consolidated into direct loans. At this point, if they're participating in the waiver and they have loans available, your loan servicer should go back and look at all those, and regardless of whether you had the consolidated loans, the right type of loans, the right repayment plan, give you credit for past payments as long as you have the correct employer and full time. And then as long as they're doing the waiver, the department is authorizing refunds for some back payments that you made for that. However, if you go through and you end up meeting the 120 payments normally without use of the waiver, and they get your application for forgiveness, under that circumstance, you would not be receiving any type of refund. So it's kind of a difficult situation. I would say that you would actually want to talk to your loan servicer specifically about your case to understand if you'd possibly be qualified for some sort of a refund on there.
All right, great. Thanks for that. And we also dropped in Scott's email in the chat. So if we're not able to answer your questions, feel free to reach out, and we'll be circulating this all in the next day or two, so you'll have access to it. Our next question is, my loan was in default, but it is out of default now. I'm wondering if payments I made while it was in default would count towards the 120 payments.
Again, I would need a little bit more information.
More information.
Just to give some thoughts. So if the payment made for the default was occurring before the CARES Act pause of payments happened in 2020, which kind of brought everybody out of default, then those rehabilitation payments would not necessarily count towards the 120 payments. But I would need to go back and check on that. It's a very unique case. So I'd recommend that person or people who have that similar question also reach out to me, and I can get them a direct answer.
Great. Thanks, Scott. All right. Our next question is, I received an email from the Secretary of Education advising that I qualify for X number of additional months of countable payments under PSLF, but it will take a few months to process this back on the Fed loan servicer side. It was one of the best emails I've received in a while. Do you know if the number of new months I qualified for under the waiver will be deducted from the number of payments that are remaining on each one of my direct loans?
Yes, and so it sounds like to me in your situation that they had all the updated information to be able to go back and check it, which is great. You obviously are on top of your communications because you got the email that said we were reviewing you. You got the follow-up that said we believe you're going to qualify for X amount of payments. So the next step is when they actually go through and do that final check of that employment versus the payments and give you credit for that. At that point, you should see it deducted off the payments that you would still owe. So if they're saying, for instance, you expect 10 additional payments, but you had 40 originally, you'll see that drop down to 30 on the scorecard that they have on the main website to keep track of that. If it then goes over, say, for instance, if you owed 40 payments, but then they said you're going to qualify for 50 additional payments, then that's where you might look for the possibility of a refund, for instance.
All right, thank you. Next question is, does time working in county government count?
Yes, if you are a full-time employee in a county government, that definitely counts. State, local, or federal government all count for that definition of qualified employer.
Great. And then this person also asked, Did I understand correctly that late payments do count towards the 120?
Under the PSLF waiver, they're going back and giving credit for late payments. And just to give you, clear conscience, a late payment based on their definition is usually 15 days beyond your due date. So if, for instance, you had a due date on a Friday and you forgot about it till the Monday, like that's not usually considered a late payment, but it's after a substantial period of time of 15 days that they consider that to be a late payment. But under the PSLF waiver, they are going back to give credit for that.
Great, that's good to know, and nice to be able to see what the late payment identifies as.
Yeah.
Next question is, can the waiver begin as soon as you take the loan and make payments, or do I need to finish my school program before qualifying?
So this is an individual who is not in repayment yet, is still borrowing. Yeah, that is a good question. And I think to one extent, since you haven't finished, you're not in repayment yet, so you don't have a repayment plan. And I think that might be different, but I have not heard any guidance from the Department of Education on that specifically. If that person also wants to just reach out to me directly, I'll see if I can find any specific information on that, but I've not heard anything about that particular type of case.
Great, thank you. All right, the next question we have is, this is someone clarifying back that asked a question earlier. So if you are not currently employed and you paused your payments, will that still count?
If you do not have the qualifying employer at this point, you would not have received the credit for the CARES Act pause, if that's what they're asking for. If they're not under the PSLF waiver, if they have the wrong type of employer, they would still get credit for it. So I'd have that person reach out to their loan servicer and just ask about their particular situation and whether or not they would get any credit for it.
All right, that sounds good. Next question is, this person heard about the Parent Plus loans, which don't qualify for PSLF, as well as loans that do qualify for PSLF. You can consolidate them. And then the consolidated loans counts qualifies for PSLF under the PSLF waiver. Is that correct?
We're recommending that you reach out specifically on the plus loan aspect to your specific lender. There's a bunch of hoops you have to jump through to make that work, as I understand it. And it's in a way a loophole in the regulations. So they are definitely going to be in the best place to recommend on what you do. Just as a note, in general, PSLF or having a plus loan does not disqualify you from receiving a PSLF from it. It's harder to do just because there's not the same amount of repayment programs one can go into when they have a plus loan. And so it does take a bunch of hoops to jump through. So I recommend that anybody with plus loans reach out to their loan servicer for additional information about what they can do in their unique situation.
Great, thank you. Lots more questions, which is fantastic. Next question we have is, just to clarify, we must fill out PSLF form per each qualifying employer, or will one form allow us to add multiple employers?
I believe that one form would allow you to get signatures for multiple jobs. We recommend you don't do that, just because if you have information on one that's been signed off, it's easier to send that ahead and get credit for it rather than having to turn around and send it to another employer, and the possibility of then that getting lost and you having to go back to multiple employers again. Just for the sake of urgency, I recommend you just do one per form, but you could feasibly add more than one per form.
Yeah, that makes sense to kind of just keep each employer with one, so you have it to keep track of.
Yeah.
Next question I got is, I submitted a PSLF form after the announcement of the limited waiver in October and received a notification from FedLoan that they were reviewing my eligibility in November. I haven't heard anything since then. My direct loans are with Advantage. Is there anything I need to do to get them to FedLoan, or just need to wait for them to process all of the applications?
It sounds to me that this individual with their PSLF form are not at the 120 qualifying payments mark, since they mentioned a different loan servicer than who would normally have processed loans, those loans that are applying for PSLF, which is MyFed loans or FIA. So in this case, I think what there sounds like they're waiting for is the process by which their current servicer sends their loans to the new servicer. And there's been some new things in the news about that specifically, which is MyFed loan or FIA has decided to not participate in as a loan servicer anymore. So their loans are actually currently being reassigned as well to other loan servicers. And that might speak to the delay that you haven't heard anything about it yet. So I wouldn't panic at this point, but I might just call your old loan servicer and be like, do you have all the paperwork you need for this to get it processed and moved over to the correct loan servicer? But due to that change in loan servicers for those individuals who are participating in PSLF, I think they're waiting for those to get, or at least start the transfer to a new loan servicer before yours gets transferred, since it would just get turned around and transferred again. So that sounds to me what's going on there, but I would double check with your loan servicer to make sure everything's okay on their end.
Great, thank you. Next question is, I have 5 loans, which are all direct loans now, but 2 were not direct loans until March of 2015. When I consolidated all my loans. I have 28 months in 2 loans that were not eligible due to not being a direct loan. Under the waiver, will those payments be added to those loans?
Yes, under the waiver, you should receive credit to those loans that were the improper type of loan before you had them consolidated.
Great. And I've seen a few questions. We are going to share this recording once we have it up on our YouTube page, so you'll be able to see the PowerPoint there. Next question I have is, does time spent clerking for a judge working in court count as qualifying in our state and federal courthouse employees qualifying?
I don't know that much about clerking as a for a judge. I would say if it's a full-time job and you're paid by the government that would do it, for instance, I'm assuming that a state judge is paid by the state government and a federal judge is paid by the federal government, and the clerkship does still qualify for 30 hours, then you should qualify under that type of arrangement for your PSLF, as long as you also had a payment set up for that as well. If it's something where it's more like an internship where you're doing like 10 hours a week, then you wouldn't qualify for the full-time aspect of it. But I'm not sure if that's how it works. I think it's like a full-time job, in that you would receive full credit for the PSLF program.
That's good to know. This is a good question for those who are retired in the audience. So this person retired back in 2012. I've continued to pay, so I have 120 payments, but my employment ended. Would I qualify?
Without current employment at this point, you would not qualify for the PSLF. So it would really just be looking at other types of loan forgiveness. If you are on some sort of income-driven repayment plan, they usually also have some sort of loan forgiveness at the end of 20 or 25 years, depending on how long you've been making payments on your loans. There are slight differences to that forgiveness in that, like, that's taxable income on your taxes versus non-taxed income. But there would be other loan forgiveness programs you'd qualify for. Whereas if you've been out of employment since 2012, the waiver wouldn't apply to you, nor would the CARES Act benefits related to that. You should still be, if you're still in repayment on that, though, you would still be in the payment pause and interest reduction to 0% as long as it's a federally owned Fed student loan rather than a FEL program.
All right, thank you for explaining that. Next question is, what is the likelihood that loans meeting that 120 payment requirement will actually be forgiven? Is CFPB or another federal agency enforcing forgiveness, delays, and denials from loan services?
Yes, I can tell you from personal experience that those student loans are being forgiven. I myself received through the PSLF waiver student loan forgiveness last November. So it does happen, and there are success stories. But we understand that there are definitely problems through the situations, that a lot of people have gotten bad information from their loan servicers. So my recommendation to you is if that through the process, if you felt that you've been treated unfairly or gotten a denial you don't agree with, beyond talking to your loan servicer, either filing a complaint with the FSA Ombudsman Group or the CFPB's Ombudsman, which there were links to in the slide presentation, would give you an option to further your case through our complaint processes, rather than having you go back and forth directly with your loan servicer. So there are options out there for you.
Great, thanks, Scott.
I will take it from here and continue with some of the questions just to give Christine a break. So this next question is, I had my loans with Sallie Mae and Navient prior to consolidating with Fed Loan Servicing back in 2015. Do the payments I made prior to consolidating with Fed Loan count as an on-time payments towards PSLF? How do I go about requesting from Navient and Sallie Mae that the payments made be communicated to Fed Loan Servicing?
It sounds to me that, did they say that they're still paying, or they finished paying in 2015?
Doesn't specify that.
Okay, if this person is still making payments on their loans and whatever, regardless their servicer is, and they want to receive some sort of credit for this, submitting that PSLF form and consolidating the loans if they are not currently direct loans is what you have to do to have the waiver looked at for those loans. If you have repaid your loans previously to this, the waiver being announced, you would actually not be able to receive the waiver since that loan is fully paid off.
This next question is, I've consolidated my loans and reapplied for PSLF as of last fall and always worked as a state employee. I should have received PSLF in November of 2017. I had paid for 20 years by then, but only 10 years under the PSLF rules. Since my denial in November 2017, I have continued to pay. If my loans get forgiven now, how do I get reimbursed for the last 4 years of payments?
And I don't know how they do the exact calculations on the refund aspect of that. If they go through the PSLF waiver to give you credit for the past payments, and they determine that you are eligible for it, they'll actually just refund that money to your account. You're kind of in one of those situations where you've got a lot of things going on. So I'd recommend that you specifically reach out to your loan servicer just to make sure that everything's going smoothly and that they've got all the information they need to calculate that and just to check the status on it. And since it sounds like you've also had problems in the past, feel free to reach out to one of the ombudsmen that I mentioned earlier if you still feel that you're getting kind of the runaround from them. And then either the CFPB or the Department of Education will be able to look at your unique case and go through it with the loan servicer.
This next question asks, do you happen to know if Fed Loan Servicing will continue on as a servicer until after new qualifying payments under the PSLF waiver are applied to our account? Their website says their contract is expiring sometime in the near future. I'm a little concerned that if their contract with the government ends before new qualifying payments are applied, there could be problems with the transfer of information to a new servicer.
What I can tell you that I know about that situation is that last year, Fed Loan Servicing or FIA decided to step down and no longer be a loan servicer. They came into agreement with the Department of Education to extend their contract for 1 year to create a smooth transition with whoever will end up taking on their loans. And I can tell you that the Department of Education does monitor in these situations as loans are transferred from one loan servicer to another, that they do quality assurance checks to make sure that payments aren't missed for things like this, and that everything is smoothly transferred from one organization to the next. My recommendation to you, however, is that since you already know that that's going to happen and it's going to affect your loan, that now is the time to make sure that you have a full accounting of your records for the payments that you've made with Fed Loan Servicing. Make sure you go ahead and download that payment transaction history onto your computer, and that every month between now and then, you make sure that you make notification to yourself that there was no payment this month, or there was a payment this month, it was for this month, I paid it to the state, and that your employment is there, just so you have records in case you have to later go back and inform the new servicer you have that all the information was not taken correctly. It's always better to have that information ready to go rather than to have to go back when there's a problem.
Great, thank you. I know there are a ton of questions left. If we don't get to your question today, because I want to be respectful of Scott's time and everyone else's time, you can email the email that Scott included, that we also included in the chat, and which will also be included in the follow-up email that you will receive tomorrow. So this last question that I will ask is, what would happen if you went into the private sector for 3 years after 10 years of public service and were making payments the whole time and then returned to public service?
Okay. As I said, any breaks that you take, payments do not have to be consecutive. If you made a full 120 payments, which would be the years prior to going into the public service, or sorry, the private service job, you may qualify already for that public service loan forgiveness. So you should double check that. But if for some reason it's a smaller amount, say you work 6 years in public service, only got 6 years worth of credit, went to the private sector for 3 years, and then you decided to go back, that was more than okay. You still receive credit for those 6 years. You just have to do an additional 4 years in public service to qualify for that PSLF. You're not penalized for going into the private sector, so you just don't get additional credit during that period. So 6 years already would have counted. You just have to complete up to the 10.
Awesome. Well, thank you so much for being here today and presenting on this topic. This webinar is recorded and it will be posted to YouTube. It should be uploaded by tomorrow. So if anyone wants to look back at the presentation, at the slides, or at any of the questions that might be relevant to you, you can definitely take a look at that, and that link will be sent to you via email. I'd also like to thank my colleagues at OEE, Elena Van Tassel, Christine Callahan, and Jack Martin, all for helping me organize this event. I greatly appreciate your help. And thank you once again, Scott, for being here. Thank you all who attended. I hope to see you at a future Money Talk Tuesday, and I hope you have a great rest of your day and a great start to 2022. Bye, everyone.